Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances and you need to decide for yourself whether it's appropriate to you. Okay, so our market today finished off a fairly whippy session towards its highs. Now, look, not much has really changed through the last week other than the one big volatile day we saw around Thursday. So basically, we're just tracking along sideways. The trend is still overall up on our market, although in the short term we've had a reasonable little pullback here, coming back to some key levels of old resistance, and we could be using that as support. So we're just looking really for where the bottom is of this current move. At this point of time, from highs to lows, we've pulled back about 3%, and that's probably the most we've really seen this year. In a way of a pullback, we don't really pull back much more than that sort of 3 or 4% mark before we find some form of trend and push higher. So I guess in the medium term we still feel the trend's going to hold. I still think we're going to push up a little bit into the end of the year, off the back of a bit of light at the end of the tunnel with the vaccine rollout locally. Still a bit of physical stimulus to come from the US as well could help drive that next kick up higher. But nonetheless, look, in the very short term here, we've got a bit of uncertainty. The uncertainty is really about whether 74 is the bottom of this downward move at the moment, or whether we're going to crack through and actually come back down a bit further, right? I guess only time will tell. There's a lot to come in the next few weeks that could really drive things higher or lower. Okay, so coming across the US market, S&P 500, they've also seen a bit of selling coming into September. Let's brought them back to their overall longer term uptrend line. So we're sort of in a situation now where their major index and our major index is both testing the uptrend. There's a few levels of support through here that this could hold as well. I guess once again it's going to be time will tell on what level they're going to hold. Okay, for me at the moment I do believe they're either going to hold close into around where they are now. If not, they'll come in and hold that 44 level. Okay, they're sort of my two targets at this stage. I don't think things are going to get that volatile at this point of time. I know we're seeing a lot of US big analysts come out and suggest there's going to be a market crash. And yes, there's always a market crash around the corner, especially when you've seen an uptrend like this. But at this point of time, I think they might be a little bit early in calling it. But let's just see what happens after the Fed announces next week. That's the big one for me, okay? If the market can hold and go sideways or even rise on the back of the Fed tapering their bond buying, then for me that would be a pretty bullish sign overall. Okay, so just some of the things that are happening locally. Obviously, iron ore falling continues to weigh on the miners' sentiment. So we're seeing the big three, Fortescue, BHP and Rio, continue to pull back on the back, and it's mainly iron ore. Most other commodities are up near multi-year highs. Aluminium broke into an all-time high. Nickel broke into an all-time high recently. Copper's not that far off its all-time high. So all in all, the commodity space is quite healthy, apart from iron ore. Iron ore has come off that sort of 220 as highs earlier this year, and we're sitting about 120 now. So that's a pretty big correction in a very short period of time. A lot of that is off the back of China capping their steel output, and that cap will likely remain in place until early next year. Okay, so look, at some point it's going to bottom out, right? And we're just going to wait and see where this iron ore price will bottom. Okay, we'll find some equilibrium somewhere where people will start going, okay, well, there's still quite a bit of production happening in China. It's capped at the 2020 levels, and then it's just a question of supply. Okay, so how much will Vale be able to bring back on over the next 6 to 12 months, and how badly will that affect the iron ore market? So yes, there's some jitters in this space at the moment. But also, as long as iron ore holds above $100, I still feel like the miners are in a good place. So, we are very interested in the miners at the moment, but we are not touching anything until iron ore bottoms out, guys. All right, so we'll be looking for signs of that in the coming weeks and months. The other big thing locally really is about vaccine targets. At this point in time, there's a lot of positive talk that we're going to hit that 70 to 80% targets in Victoria and New South Wales through November, December, which means we'll start to see these harsh lockdowns, relaxed a bit. So, that's the light at the end of the tunnel here. That's everybody starting to speculate that our economy will be able to stand on its own 2 feet once more and not need the bond buying and not need this really accommodative stance from the RBA. If we can see some reasonably good economic data continue through end of this year into next year, as we come out of these lockdowns, that should help the market stay strong. Okay, so let's just see, right? Only time's going to tell. As we get on the other side of this, though, guys, economic data is going to become more and more important. Okay, so as central banks start to unwind all this stimulus, we want to be able to see the economy continue to grow without it. So what will happen is that economic data month on month will become so much more important than what it is right now. Okay, so just keep that in mind as we come into next year, because that's really going to control the themes of the market and the rest of it. Okay, now coming across the US tonight, we got the US CPI number. We have seen a bit of volatility around these releases, in particular that if it comes in much higher than expectations, a lot of investors start speculating that the Fed has it wrong and that they're going to have to increase rates sooner rather than later. And as soon as people start talking about that and spruiking that, we start seeing a fair bit of volatility in the short term. Jay Powell was very, very clear in what he said last month in the Jackson Hole meeting, in that they're going to start tapering bond buying soon, but once they finish tapering, there's the likelihood of interest rates going up after that is very, very low. Okay, so that's a lot of reinsurance for the market. And that really brings me on to the next big thing. For me, the big thing really in the short term is the Fed. Look, the last time the Fed tapered bonds was 7 years ago, 6 years ago. The first time they got into this quantitative easing, the market had what they call a taper tantrum and pulled back. So let's just see whether the market reacts in the same way this time. And I believe that's what's really causing the nervousness out there. I think that's why the big boys are out there sort of saying the market could crash, because of this, right? Because we know that the Fed's likely to start tapering around November, December. Look, my view on this, guys, is the Fed comes out next week and says, look, we're going to start tapering in December, but, we won't stop bond buying until maybe the end of next year, and we're going to do it in a very slow and controlled manner. We're going to watch the economic data, and we're going to do it very slowly. If they can come out with a message like that and keep reinsuring the market that interest rates are not going up next year or the year after, something like that, then I think the market will be fine. Because you're going to see the other side of this. If the Fed feels they can start tapering their bond buying, it means that the economy is strengthening. It means that they believe the economy is going to be able to stand on its own 2 feet without having these measures in place, which in itself is very, very positive, not negative, right? So yes, you may see some short-term volatility on the back of this, but it will likely only be short-term, because ultimately this is a positive thing, not a negative thing. Okay, is the way I see it. All right, so look, I actually don't think we'll get much of a taper tantrum. I think Jay Powell has been very good lately in his language in making sure that he reinsures markets and investors. And because the US market's already pulled back a little bit here coming into this announcement, I think he's going to be extra cautious in what he says. All right, but only time will tell. Could be right, could be wrong. Let's just see what next week brings on the back of this. Let's see what the CPI reading does tonight. I think over the next week or two is where we could still see a bit of volatility, because there's just a lot going on, right? Once the market has time to digest this news, then we'll likely get back onto our uptrend again. The other big thing is to keep an eye on Biden and his stimulus and his budget plan here. Three things going on here. One, obviously they're trying to pass a $3.5 trillion spending bill. That requires them to bring in some new taxes. Let's just see what they get passed through on that side of things and how that affects the market. The other thing is their debt ceiling is also up for negotiation at the moment. So let's just see how all this plays out in the next 2 or 3 weeks, right? There's fiscal stimulus and tax new taxes coming in that can affect sentiment in the US a lot, but also that $3.5 trillion for me is very, very positive for infrastructure stocks. For reopening value type stocks, as we start coming into that reopening phase and everybody starts getting back to work, it means quality jobs, guys. Construction jobs that are usually fairly high paying, and then also a lot of that has that flow on effect through those industrial type stocks like CSR and Fastenal, James Hardie, those types of companies that are supplying that construction. All right. So look, I think that will help hold markets and help push markets up over the next 6 months, guys. So I'm still a little bit on the bullish side, but cautiously bullish. I think more cautiously than I have been for a while. Because obviously anything around monetary policy gets me nervous, guys, about the market. And it's not about nervous about what's going to happen in the economy. It's more nervous on how the market will react to the news. Okay, markets are a little bit overheated, so it's not going to take much to trigger a bit of a correction phase. And the thing is, you just don't know when it's going to come, right? So you got to look for the technicals, if the trend starts to break, if we start seeing reversal signals on our technicals, then we talk, right? Then we start going, okay, let's put less on the market, let's use our money management wisely, and just back off a little bit. But if we show signs of continuation, we go back into the market, yeah? All right, so that's what we're looking for at the moment. We're in a pullback phase. Is this going to be the start of a reversal? We're going to break trend to the downside, or is this just a pullback in the trend, the strengthening of the trend, and we're going to keep shooting higher? And that's what we ask ourselves on every single pullback of this market. Okay, so I'm not here to try and predict when the correction is going to happen. I always know a correction's on the horizon, and I'm always ready for it, and I'm always waiting for it. Okay, and looking for those technical signs. All right, okay, so that's where we're at. Thanks for listening in. Have a great week, and bye for now.